Welcome back. In today's video, I want to talk about budget categories. What are they and why do you even need them? And if you like what you hear, please subscribe, hit the button down below, and don't forget to hit the notification bell so you don't miss a video. And also, I have a blog post that corresponds with this video. I will definitely link it in the description below. Now, before I begin with categories, I thought I should start with the basics. What is a budget? Well, a budget is a plan for you to tell your money where to go, rather than your money bossing you around. And in order for that to happen, you need to establish a budget based on your income and your spending. Keep in mind, you cannot spend more than you earn. Now, the word budget tends to have negative connotations, but nothing can be farther from the truth. Find someone who is wealthy and ask them how they got that way. I can almost guarantee that they were intentional with their money and decided ahead of time what they wanted their money to do. A budget is basically a map of your money. You get paid and you map out where you want your money to go, which direction goes. And you do that with budget categories. And you do that all ahead of time. So what are budget categories? A budget category is basically a group of expenses within your budget, like groceries, car gas, entertainment, clothes, mortgage, vacation, savings, potions, school lunches. You get the picture. So how do you even begin a budget? Well, to begin, first off, keep track of all of your expenses for 30 days. And I mean all your expenses, the cash ones, the credit card ones, and the automatic payment ones. And assign a category for each expense. Now, I have tons of blog posts that will help you out, particularly one called Benefits of Budgeting, How to Begin a Budget. I'll definitely link that in the description below as well. I'm also adding a link for my free budget. This budget will definitely help you get started. Now, once you know all of your spending, it's time for you to map out your future money. So this is what you do. Grab all of the expenses that you kept track of from above. Highlight like kinds, for example. Highlight car gas blue, groceries pink, utilities orange, eating out green. You get the picture. This is a visual of where you spend your money every month and helps you in the next step, which is then you're going to add up all of your expenses within the same categories. Meaning, add up all your groceries together, all of the eating out together, all of the kids' activities. Just keep adding them all the likes together. Add up all the categories, get a grand total, and this will be your number for all of your expenses. Now add up your take-home income or your after-tax income, which is your ATI, and subtract all of your expenses from your ATI. Now, if you have money left over, kudos to you. This is where you begin with your budget because you're not spending more than you earn. But if your spending is greater than your income, after-tax income, meaning it's a negative number, you really need to make some adjustments. You may need to make them immediately. You cannot establish a budget when you're spending more than you earn or spending too much. Cut back on something or everything so that your spending is equal to or less than your take-home pay. Now, there are some guidelines to help you out for your budget categories. And once you establish your budget, take a look at the guidelines I will list next. And these guidelines will ensure that you're not overspending in a particular area. And if you are, make some adjustments so that you're back on track. And please remember, a budget is not only for today. A budget will help you plan your financial future. Your older age needs money to live on, so now is the time to begin. So guideline number one is this, your housing. Keep your housing between 25 and 35% of your ATI. Anything you spend towards keeping a roof over your head is considered a housing expense. This includes mortgage and rent payments, HOA dues, property taxes, homeowners, renters, insurance, home maintenance costs. Number two is your utilities. The recommended amount is between 5 and 10% of your take-home pay, and they include water, trash, sewer, electric, gas. Those are the musts. But they can also include internet, cable, phone, and or cell phone. Number three is your transportation costs. Keep those between 10 and 15%. Whether you drive, take a train or a bus, you need to give from A to B. So this category also includes car payments, auto registration, DMV fees, parking tolls, auto maintenance, auto insurance. Number four is your groceries or food. Now keep these between 10 and 15%, and this category includes food and eating out. Now, when you eat out less and less often, you will decrease your grocery budget. Number 5 is giving. Now, your giving is recommended off your gross before tax money, and give 10% of your gross income to a worthy charitable cause. Paying it forward is a great way to live. Guideline number 6 is your insurance. Keep it between 10 and 25%. And this category really depends on you. Your homeowners or renters can come under this category or under housing. Same with your auto insurance. It can be in this category or under transportation. But it should definitely include your health insurance, your life insurance, disability insurance, or any other insurance policies that you have. Number 7 is your medical and health expenses. Keep this between 5 and 10%. And this category includes any out-of-pocket money that you spend on your health. Deductibles, dental care, prescriptions, urgent care, hospital bills, and medical devices. Number 8 is your savings. Your savings need to be between 10 and 15% to begin with of your gross income. You're going to work your way to a minimum of 20%. So you're going to start out with 10% and put it in your IRA or 401k or any other retirement vehicle that's available to you. And then you can also save money in other areas like emergency fund and repair funds. Number 9 is recreation. This category, keep it between 5 and 10%. And this includes your lifestyle expenses, your gym memberships, kids activities. It also includes Netflix, Hulu, Disney Plus, Disney Channel, babysitters, or concert tickets. You know, all the fun stuff. And number 10 is your personal. Keep this between 10 and 15%. And this category is for anything personal, like your clothes, your haircuts, manicures, home decorating, or even your renovations. And then at the end, add an emergency fund and debt payment plan. In addition to all of the above, every family needs an emergency fund. Money set aside for unexpected expenses, because life is full of the unexpected, isn't it? I will link to a few posts for you about emergency funds. You also need to be paying down your debt. This will mean cutting back on any of the above categories of spending so that you have the extra money to pay down your debt. Start with your non-essential categories like your personal spending and recreation. And if that's not enough, you might need to make changes in a whole bunch of other areas. Selling your car and getting a less expensive one, downsizing your home, cutting back on cable and entertainment. When you map out your money and you become intentional about your savings, your bills will get paid on time, your saving and retirement accounts will grow and get really fat, and you're on track to find your financial freedom and joy. Hope this helps. Any questions, drop them in the comments below. I'm here to help. And as always, I'm cheering you on as you work towards your financial freedom and joy.